Welcome back to the channel. Are you interested in learning how to make your money shine a little brighter? Then this video is for you. Today, we're diving into the world of gold investing, specifically for beginners. Gold has been a shiny object of fascination for centuries, but can it be a wise investment for you? Let's break it down. Why consider gold? First things first, why even invest in gold? Well, gold has a long and storied history of being a safe haven asset. This means that when the stock market gets shaky and investors get nervous, they often flock to gold. This increased demand can drive up the price of gold, making it a potential hedge against stock market downturns. Gold is also seen as a hedge against inflation. Inflation is the gradual increase in the cost of goods and services over time. If you hold cash, inflation can slowly erode its purchasing power. However, gold has historically held its value relatively well over time, even as the cost of living has increased. So, while gold itself doesn't generate any income, it can be a valuable tool for investors looking to protect their wealth during uncertain economic times. Going for the gold. Different ways to invest. Alright, convinced you want to add some gold to your portfolio? Great! Now, there are a few ways to do it. 1. Owning physical gold. This is the classic way. Think gold bars, coins, or even jewelry, though the resale value might be lower. 1. You'll need secure storage, which can add extra cost. 2. Gold ETFs, exchange-traded funds. These are like baskets of gold ownership, traded on the stock market. 2. Super convenient, but you don't actually hold the physical metal. 3. Gold mining stocks, investing in companies that dig up the gold. 3. This can be riskier, as the stock price depends on the company's performance, not just gold itself. Gold investing, not always a golden ticket. Before you rush out and buy a gold bar the size of your head, here are some things to consider. 1. Gold doesn't pay you. Unlike stocks, gold doesn't pay dividends or interest. 1. Its value relies solely on price appreciation. 2. Storage costs. For physical gold, there are safety deposit box fees or the cost of renting secure storage. 3. Gold is volatile. The price can fluctuate, so don't expect a guaranteed return. Gold investing for beginners, top tips. Alright, so you've weighed the pros and cons and still want to give gold a shot? Here are some tips. 1. Do your research. Understand the different ways to invest and their risks. 2. Start small. Don't put all your eggs, or gold bars, in one basket. 3. Invest for the long term. Gold is a long-term play, not a get-rich-quick scheme. Remember, gold can be a valuable addition to a diversified portfolio, but it's not for everyone. Do your research, understand the risks, and invest wisely. Thanks for watching. Hey there! If you enjoyed this video, consider giving it a thumbs up and subscribing to my channel for more content on investing and personal finance. Hit the notification bell so you never miss a video. In the comments below, let me know what other investment topics you'd like to see covered. And if you're interested in learning more about gold investing specifically, I've added some links to helpful resources in the video description below. Thanks again for joining me, and happy investing!